Welcome to the FX Money Show podcast. FX Money Show podcast. Where your host, Nick, uses his 30 years of experience to demolish the FX markets while exposing the how, why, and when of Forex in front of your eyes. So take the foggles off, subscribe, and share with your most trusted friends. Pet the cat. Yes, I said pet the kitty cat. Chew some gum and put the headphones on the bone dome. Time is money. And this is the FX Money Show.
Is it that bad yet?
It's very good.
Yeah, I'm not, like, I don't have that much confidence, so I should practice more.
Maybe not on here, but I kind of feel like I'm at, like a kindergartner's recital. You have to clap, but it was bad, Like, oh, good job.
Hey,
You tried so hard.
It's probably better that I play the ukulele than the radio.
Really?
Because the radio, I kid you not, the radio, I play that and it goes out of tune. It's really pretty bad.
Your ukulele's out of tune, too, just to let you know.
It's jazz, you wouldn't know.
It's a special kind of tuning?
It's a special kind of tuning. Yes. Yeah. Yes.
Okay.
All right, I'm going to tune that out.
Thank you.
Tune now. You're welcome. You're welcome. So how's did you trade yesterday?
You talking to me? You talking to me? I was.
Who else?
Yeah, I traded yesterday.
Who else is on the call?
Lee. Was yesterday Tuesday?
Yeah.
If yesterday was Tuesday, he traded.
Yeah.
No, I traded yesterday.
You traded yesterday?
Friday, before I started working on some coding. But yeah, I did.
Oh, what did you code?
Oh, okay. So a different version of our plot sentiment.
Plog and Delpa.
Don't ask where I came up with them. Oh, I didn't come up with plog. That was you.
Well, the plog was unintentional. The plog was actually a typo. And
Whatever.
I said, you know what? Because plot, T and G are just over, the T is just over top of the G. And I don't have letters on my keyboard.
I was going to say, how would you know if it's right over the G? You can't see that.
Because I do know where the letters are, but I actually have to look at the blank keyboard to recognize where the letter would be.
Are you supposed to get a new one? Didn't I win a bet? That you had to buy yourself a new keyboard.
Hello, I think my microphone is going out. Hello, my speaker's not working. Hello?
That's Alex. Alex has to buy it.
Oh, Alex has to buy it.
Yes.
Okay.
Yes.
That's what it is.
You see the video Alex did yesterday?
Yeah.
Classic, epic.
Oh boy, a little too snuggly.
Oh man, yeah, that was funny.
But how did he said 1,400 kilometers or some ridiculous number of or ridiculous distance? But how did he do that in one day?
I don't know. He must have been driving a really fast car.
Yeah.
He's got a Tesla. He's not telling us. He slept the whole
Got a
way.
Tesla.
He's got a Tesla.
Self-drove.
Yeah, he's got a Tesla. He stops by the local power plant where they burn coal in order to produce the electricity for his Tesla.
That's right.
Yeah, it's.
Here's an idea, though. Because I do have a little bit of an engineer mind. At least my 6-year-old says. But here's an idea. You take a steam boiler. Right? Not that we're going to talk about power plant distribution and everything. But you take a steam boiler. And that obviously takes water to create the steam. But the steam can, in fact, produce energy, in kind of the traditional power plant settings or configuration. But why not take the very same water as you're boiling it and produce hydrogen, which then goes into the boiler to boil the other portion or mass of water to produce the steam. You see all these, you can get kits now. I actually acquired a book because I'm going to take an antique car and make it hydrogen power, I think.
Oh, cool.
Like a 1926 Model T.
You know what? I saw one of those yesterday. I got a picture of it. I'll send it to you.
That's why I said it. That's why I said it, because you took a photo of it on the parade. So, am I right?
I didn't know I sent that to you, though.
You didn't send it to me.
My wife took that picture.
Yeah, but trust me, I know.
Wait a minute. I'm like, wait, what's going on here? I'm confused.
That is intuitive. What do you call it, Liam?
Of terrifying.
Yeah. I'm like, do you work, Nick? Do you work for Google? Can you hear what I'm saying when I have my phone?
No.
Don't
That
lie.
all my life,
Tuition.
all my life, all my life, I've been able to read. Not everybody, but read people that I'm a little bit more connected with. All my
I
life.
don't get it. I literally have never seen a Model T in person. I don't understand how you knew I saw. I'm a little freaked out right now.
Sorry. It's nothing. It's nothing. It's just I'm an empath. And I absorb what people are doing, and when I saw the photo of you taking
Me stealing
the candy
from a baby.
the first thing I thought was parade Model T.
Really?
Yeah,
That was literally just after, or no, it was just before.
yeah.
That was just before we saw the Model T, and I was like, I told my wife take a picture to show her dad. He's really into cars. How in the world?
It's funny. It's funny.
What was I wearing?
It's
The force is strong with this one.
what were you wearing? You don't want
Yeah,
the
what was I
public.
wearing?
You don't want the public to know.
A bikini.
Oh, Alex. Alex in his bikinis. Teeny weeny. Yellow polka
dot bikini. Yeah.
But yeah, it just it happens. That's what I thought, and that's
Amazing.
Yeah, good times. All right. So anyway, if you take, you can get, like I started to say, you can get kits to produce hydrogen for vehicles, and it increases the mileage. And I want to do that for an old car. And make it a fun,
That's cool.
kind of a theme,
Yeah.
theme type thing. Anyway, so I bought a book to convert or to produce hydrogen. So I'm thinking, all right, I do have kind of a fascination with old machinery and steam engines and stuff like that. And I thought, well, if you've got a steam boiler, like a vertical steam boiler, why can't you produce the hydrogen from the movement or the generation of power, produce hydrogen, which then burns or boils the water to produce the steam, and then so it's kind of recirculating, and it would truly be green energy of sorts, because it's not burning any fossil fuels, but it would produce the electricity as a result of the hydrogen burning as fuel.
Interesting.
But anyway, Model T.
Model T. I'm lost, but it sounds cool.
You're still stuck on the Model T.
Yeah, a little bit. I'm still like, how does he always know what I'm doing?
No. I turned those off.
Or no?
No. Yeah. So, yeah, that's I do enjoy that. Like, one of the things that I've tinkered around with was, producing energy production from alternative methods like gasification. And everything has carbon. Everything on this planet has carbon in it, including brain cells. But and sometimes too much carbon. But carbon being in wood, in paper, in literally everything. Well, that carbon can produce, heated at the right temperature, in an inert environment, can produce gas, which then can be burned in engines, just like hydrogen.
Oh. What's up, Alex? We were just talking about you.
Yep, we were.
Nick must have known you were about to get on.
He's in his bikini.
Hello.
There
Hello.
he is.
So, Alex, were you, by chance yesterday, driving in a Model T?
Maybe.
See? Were you at a parade?
Oh,
No?
maybe.
Okay. Were
That's
you
freaking me out.
Were you in Pennsylvania?
What were you talking about about trading? Trading?
No, we haven't actually mentioned anything about trading so far
No.
today.
No, but what do you miss?
No, you missed. Kody is a little bit shocked because yesterday, remote to me, by the way, yesterday, apparently Kody had taken a photo of a Model T, which is an old car or an old truck, and like a 1926, between, I don't know the years they make them, but
I don't remember.
yeah, but he took a photo, and he was at a parade, and sent a picture of a blanket full of candy at a parade.
I saw that.
And when I saw the photo of the candy at the parade, I thought, oh, a Model T, an old car. Well, just before that, he had his wife take a picture to show her dad the photo of the Model T. So then we get on this call, and I ask, what did I say? I don't know.
Something about converting a Model T to hydrogen.
T. Yeah. Converting a Model T, and it was just kind of, and then I explained how I knew that he had taken a photo of a Model T.
Which creeps me out, because I think you might work for Google or Facebook and be listening to everything I say and do.
Or understand where the markets are moving next.
Exactly. And it goes back to trading.
Yeah, it goes.
Kody, it's in the plug. He's got you with the plug.
Got me with the plug. But I wrote the plug.
He wrote the plug.
What did I put in it?
That's a backdoor.
No.
Oh boy.
I'm out of here.
No,
Just kidding.
let's serenade Alex.
Oh,
Shall we?
No.
No.
Yes.
Yes, I get a yes.
I know we're not friends anymore, Kody. I'm sorry.
Okay, that's good. That's enough. I don't want, I don't want to embarrass any professional musicians, the world famous musicians, I don't want to embarrass them with my talents. Not that it's remotely possible, but yeah, whatever. All right, so back to trading. Kody, you did trade. How'd you do this?
Yesterday?
How'd you do this week?
Oh, this week? It's pretty good. Let me pull up my weekly statement and do some very quick math. Almost, what would that be? Almost 30%.
That's a good week.
Yeah, almost. It's like 29, maybe 28.8, something like that.
Yeah.
Yeah.
Yeah, that's a good week.
Not bad.
And Liam, did you trade? How many days did you trade this week?
I traded 3 days.
All right.
No, I did not trade Tuesday or Thursday, I believe.
Okay. How'd you do? You come out ahead?
Uh, I came out ahead on 2 out of those 3 days,
Okay.
and then I had technical software issues on the one, and so that day beat me.
Okay.
But otherwise, yeah, even that was the good news for me was even though I had to overcome some unexpected losses, the data doesn't lie.
Yeah. 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 It doesn't. It does not lie. And Svenja?
Hi. Yeah, I traded this week. So
Yeah,
Friday was. Yeah, sorry. Yeah.
No, let's start with the beginning of the week. How'd the beginning of the week go for you? Like Monday, Tuesday, Wednesday, Thursday.
Pretty solid, I would say. Um, I don't have the figures in head, unfortunately, for the beginning of the week, but I definitely know Friday.
Mm-hmm.
I hope that's fine.
Okay. And so you had Monday through Thursday was profitable for you. I'm
Oh,
assuming.
absolutely
Yeah.
profitable. Yeah.
Yeah. And what did you do on yesterday?
Oh, yesterday was a special day. Yeah. Actually, it was the first day I actually opened my live account.
Okay. So
Whoa.
you transitioned to live. This is good. And how did you do yesterday?
Oh, it was good. It was good. I, um, well, I yesterday actually I traded two accounts.
Uh-huh.
One demo account, which actually is a copy of the live account, like same size and everything,
Mm-hmm.
and the live account. So first I was a bit like, maybe I should push it to like next week to try trade.
Mm-hmm.
So I first traded demo account, and there I made 7%
Okay.
return. Actually, confidence there.
Yeah. Yeah. Confidence.
I was at 7% confidence there. And then I was reminded that Monday actually is a holiday. So
Mm-hmm.
I thought like, well, okay. So I got the nerve to actually start trading the live account. I
Mm-hmm.
did. Actually, I must admit it was like late hours, pretty much, at least for me.
Yep.
I made 2%.
All right.
Eh.
Yeah, so it was pretty good.
Oh,
And,
oh,
I didn't want to overtrade. I probably could have got more, but it was the first day, and I thought I start quiet, so slow, but it was really I was so happy. And to be fair, it didn't feel any difference. I didn't feel any difference.
And
First, I thought I would be so nervous,
Yeah.
but it was going quite good.
and that's the question I had for you. I mean, because there is a difference for for most. There is a difference. Well, screw it. For everyone, there is a difference. But if your confidence is shaky at the start, it's going to exacerbate the lack of confidence when you transition to a live environment. But if your confidence is strong in a demo environment, you're not going to recognize the difference between, say, 95% confidence and 90% confidence. That's not a huge a huge number. Just with the inverse of it. Each of you, excuse me, hold on, excuse me. Kody, I don't recall, but Svenja and Alex and Liam, each of you, your confidence was lower and probably substantially lower or no confidence when you started on this approach. Jumping from wherever that starting point was to 60%, 70% is almost immediate until the point where you employ some rules and you start to actually engage the strategy and the analysis. Jumping from 70 to 80 is not so bad. It takes a little bit of work. Jumping from 80 to 90 starts to get a little bit more difficult. This is the high end of the echelon, the top end. But jumping from 90 to 95 takes 5 times longer than it did to get from 80 to 90. So really honing that knife, that knife's edge takes a lot of time. But, that recognition or the differential between that 95 and 90, it's really not noticeable. It's only a couple of percent difference. And that's, I think, what you experience. Where, all right, you got your demo environment trades 5, 6, 7%, and then you've got your live environment a couple of percent. So you stick with those rules, and what will happen is you'll start to see another advancing climb in confidence on your live environment. That's how it typically goes. For just about everybody, you'll see another climb. But that's all good. Alex, did you trade, or were you on the beach traveling?
Both, all of them. But yes, I trade 3 days, I think, of this week.
Okay,
And 3%, I remember.
3% for the 3 days, so 1% a day.
Yeah, more or less,
Okay.
yes.
Okay, all right, that's good. That's good. Good. And Liam, what would you give others as far as a suggestion to adapting to a different approach on the markets?
I'm not sure if this is where you're going. I definitely got a valuable lesson in redundancy. I can now attack my account from 3 different points in the event of technical difficulty. That was a change that I definitely had to make this week.
Okay, right. Yeah, redundancy, connectivity wise is pretty good. It can be really good. It can be critical. Right. And Kody, what would you suggest? 4 people.
Turn off your phones when you're not using them, because you never know who is listening. You were talking about trading.
Yeah, trading
sorry.
wise. Not.
I'm still stuck on the Model T. Anyway, okay.
Sorry.
Trading wise, I mean, there's a lot of things I want to say, but they might be rude. Yeah, but I don't know. Forget what you know, or what you think you know
Yeah.
about price action or SMC or ICT, itchy scratchies, whatever you call them. Just forget it. It's useless, and it's starting to get pissed off about it now. But it is useless. You need a better approach to the markets. Don't trade on candles, trade on data. That's it.
Yeah, and I had that.
Hey.
Go ahead.
Hey, Nick, I'd like to amend my answer if I could. The real lesson I learned was trust the data, because what actually happened, without too much detail, is when I had that technical difficulty, it was an MT4 glitch when I tried to change time frames to confirm what I already knew, and that froze up my platform. And if I had just went with the rules, we would be having a completely different conversation right now. Maybe I need to learn the redundancy thing, and that was how I learned it. But trust the rules. That would be what I would really say.
Yeah, and there's it's another conversation on the difference between static data and dynamic data, right? So what I'm assuming transpired is trying to take live market analysis, tick by tick based analysis, which then first has to calculate it, and then it has to plot it, onto the chart. But it's not anything that can be seen in history, right? You don't get it in history. It only happens live. And that's kind of the benefit of the models that we've built. But if you're going to take that dynamic data as your platform stores it or populates it, you can't change time frames very easily without it either resetting or failing the system. So what you have to do is keep your chart. So if you've got a 1 minute chart open and you're going to compare it to a 5 minute or a 15, what you want to do is open up a separate set of charts, because the data is that dynamic, and it's analyzing things on the fly for you, which goes to another conversation, which we've had before, the case for data and strategy. You can build strategies, and hopefully this makes sense to people that are listening. You can build strategy all day long on candles, and it will fail consistently. It might provide a profit, but the level of risk in building strategy on the candles is significant. And even if you get to that, you get to that 80%, win-loss ratio, which is nice. It's not the best, but even if you get to that level, the fact that you're using candles to build the strategy in itself is a flawed approach, because you're naturally following the market, because candles are in fact indicators. It's an indication of where price is. Sometimes the price is equal to the bid right now on the candle. Sometimes it's not. And that's why retail traders get requotes so much more frequently than anyone on the institutional, venues, right? But don't build strategy on the candles. Build strategy on the data that causes the candles. And I assure you, you'd be in a much, much, much better place. And that's it. So that it's just a tremendously different view. And Kody was right in saying, forget what you know. I think you said it, Kody. Forget what you know. If it hasn't worked yet, the chances of it working in the future are already slim to nothing. Right? So the best thing that most traders can do is, if they're not 60%, 70%, 80% accurate on their trading, is wipe the slate clean. But I'm speaking from a very general, point of view. 70% is good. Can you make money trading 70%? Yes. Is the approach going to have more flaws than, 90% accuracy? Yeah, maybe. Probably. Does it mean you can't make a profit? No. But does it include significantly more risk? Absolutely. So minimize that risk. No matter what you're doing, what you're trading, always minimize your risk, and understand that those candles are in fact delayed. And if you're waiting on price action to give you the trigger of a signal, then that confirms that you are in fact trading on the candles. ICT, SMC, those retail concepts, and that's all they are, is retail concepts, unproven theory, without data to verify it. It's just trading on candle and price action. And as we know, sentiment leads price by volume, and volume leads price in itself. So sentiment and volume happen well before the price action. Kody, anything else? You were going to say something else.
You were talking about accuracy. I was going to ask you, what was your profitable trade percentage, your accuracy yesterday? I already know the answer, but I think I'm pretty sure I saw it.
Yesterday was, well, I'll tell you. Yesterday was a good day. Just call it that. But hold on a second. I get the Zoom thing is in my way. I want to take a screenshot here. That was yesterday.
Yep, that's what I thought. Do you wanna say that out loud? Or can you not?
Well, I had taken now.
Not the numbers, just the percentage.
I want to explain it. So
Okay.
350 trades, right? But 350 trades is broken down by the number of positions that I've taken. So if I've got 350 trades, I might, and in a couple of them, I know I took probably 20 legs, 30 legs by time that position was over. So say it goes my way, I take a couple of legs, it pulls back against me without any sentiment pulling lower or pulling back more than a breach of or a violation of movement. And then I start building that position again as it starts to go my direction again. So 350 legs, I probably took 10 positions. Maybe 15 positions overall. One of them, I know I had 40 to 50 different trade legs, and I was just milking the crap out of it. So I had 350 trade legs, and out of those trade legs, the percentage of total was 345, which is 98.57% accuracy on those 350, with an expected payoff of $138.02 on each individual trade leg. So it was it's a good day. It was a good day.
Drawdown is like a tenth of a
Drawdown is 100th of 1%.
One is 100th. Yeah, I'm not good at math.
Yeah. So
Pretty good.
but it was good. I peeled some out, of this account, and I started piling more into it, getting the pips to go to work.
There you go.
But yeah.
So if we take Nick's 98% and Svenya's 2% for opening a live trading account on a Friday afternoon going into a U.S. holiday weekend, that's 100%.
There you go.
Yeah, that's good.
Yeah. There you go. But yeah. So it was
No more pips out there for anybody else.
well, I needed a bigger canoe. Yesterday I had to get a bigger canoe.
Well, yeah, I think like Liam's your accuracy is usually like as far as like your winning trades is somewhere around 80% typically, right? Anywhere from 75 to 90%, given the day. Am I right?
Yeah, I had a bad day midweek, 76.56%. I was actually embarrassed to show that, but
And that's a bad
that was
day.
my lowest point in a long time.
That's still pretty good. Yeah. I mean, accuracy. Anyway.
Yeah. It's tough, you go into, and I did it yesterday, and there's a couple of people that are pinging me this morning, and most of them are argumentative. They don't understand how the market moves, to begin with, let alone how do you expand on, how do you get to a level of profitability, anything above 90% and do it consistently? Well, you have to understand where the market moves, how the market moves, why the market moves. And if you're studying price action, you're not going to get there. Mm-hmm. You're just not going to get there. Or if you're relying on price action, let's put it that way. If you're relying on price action, you're not going to get there. Studying price action is different. And studying price action can, in fact, have the same structural components or physical properties as what we would call action on volume, action on the indexes, action on sentiment. Action is important. There's no doubt. Action is important. The failure of action to continue to a new high is telltale of the reversal. And we see that all the time, whether we're looking at sentiment, whether we're looking at volume, or heck, even the candles themselves, the telltale. But it's not the price in candles that govern the direction at all, which is why you'll see a high in the candles and then it'll move to a new low. Right? But as an example, what's on the screen is an example of that. So here's a series of lower highs on sentiment as price moves higher, and once it breaks down in sentiment, that's it. The candles still go for 4 more candles before they break lower. And if you're just listening to the podcast, there will be a video component of this that I'll produce on YouTube. But and I'm not a fan of YouTube because it's a bullshit channel. But there's just so much garbage on YouTube from all the quasi want to be self-proclaimed gurus that haven't not a clue what the hell they're doing, but yet there's thousands and thousands and even hundreds of thousands of people following a faulty approach. And it's just disgusting. It's just disgusting. From SMC to ICT and all that other nonsense, right? But here sentiment is leading to the downside 4 minutes before the candle breaks and goes lower. Because what's happening in there is the institutions are not yet getting aggressive because they still see retail money flow coming into that market. And they're not going to get aggressive until they realize or recognize that money flow has in fact dissipated to nothing. So now it's time to shake them out of the market by going short. And that's what happens. It happens all the time. So the only thing remaining is the component or the numbers of how much of that is retail money flow. Very small. But if you've got free money, coming at you by, retail traders hitting an asking price, and they're just letting it hit, and then letting it hit. And then as soon as that money flow has in fact dissipated to nothing, then the institutions go heavy on the shorts. And 95% of their activity is not market making. It's aggressive price taking. And that's where they're going to shake them out.
They certainly don't do that aggressive price taking on 4-hour charts or daily charts. Or
no, they don't give a damn about those. They don't give a damn about
crap.
Those. Because
that's another thing that irritates me.
If you look at the indexes, they're looking at that differential or that the disparity between money flow in, money flow out, and if they can realize an increase in their gains by moving money across borders, that is what's causing, the differential to expand. When we look at the indexes and the differentials, that's what's causing that. So if you're stuck to price action, if you're stuck to the 4-hour chart, the daily chart, the 4-hour, the 1 hour, the 30-minute, the 15-minute, the institutions don't care about that. They're looking for opportunity right now where they can speculate and take an advantage of what's out there in terms of limit orders, where they can, move the markets or in conjunction with other institutions, move the markets and take advantage of what's coming into the market and what's going out. But if they see an increased revenue stream or increased cash flow interest rate by moving money across borders, that's where it's going to go. Because it's risk-free to them. They're not trading per se. They're just holding money in another currency for a week or 2 weeks period of time. But it's absurd. It's absurd. So that's it. Anything else? Any last thoughts? No. Okay, and then in closing,
Oh no.
Oh,
Mute
yeah.
him. Somebody mute Nick. How do we do it?
Oh,
There's got to be a button.
Here we go. Okay, that's it. Not too much.
That wasn't bad. It was.
Oh, wait, one more.
No.
All right, we're good. All right. So, yeah, we'll catch you guys on the flip side.
All right.
Cheers.
Bye.
Cheers.
You've just listened to an episode of the FX Money Show, where every day Nick discusses analysis that drives traders' confidence through the roof. Subscribe to the podcast, enjoy the show, and discover your inner trader. The service of the FX Money Show is to provide foundational educational content to trading listeners of foreign exchange and other financial markets. Anything expressed in the FX Money Show by its producers or guests is educational in nature and in no way constitutes advice. You must understand the risks associated with trading financial products and use only capital you can afford to risk.